The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome back to the Option Block. Thank you to all of our dedicated listeners. You may not recognize the voice. I used to be on the show every day. Federal Holiday Mike is what they used to call me. This is Mike Cavanaugh filling in for Mark Longo. I'm joined today by Mark Sebastian from Option Pit. Mark, why don't you say hello to everybody?
Hey, everybody. I'm sure I was out all last week, too, so they're getting the combo. I don't know what they did right for this episode, Mike, but they're getting the Mark and Mike left and right combo, and it's going to knock their socks off with option power.
That is one of the best bio intros I've ever heard in my life. Thank you for that, Mark. And I think Alex Jacobson's joining us today from Options Express.
Hey, Mike. How are you?
Good. How are you, sir?
Terrific. Nice, quiet day today.
Very good. It is nice and cool. Yeah, right. No vol, nothing chopping around whatsoever. And we've got Nate. Nate, why don't you introduce ourselves for our dedicated listeners?
You got it. My name's Nate Bluestein. I'm with Pivotal Trading Concepts. What we do is we teach people to trade futures. We specialize in the S&P E-mini, teach people how to conservatively trade the S&P futures market.
Gotcha. And Nate is going to be on the interview block coming up, so we're going to riddle him with tough questions. So stay tuned, listeners. And why don't we jump right into the trading block?
The Trading Block.
I'll throw a softball over to you, Mark. The S&P, the Dow, whatever you want to look at, but we've kind of have a revisitation of what everybody forgot existed in the last couple of years, and that's volatility. What have you been noticing? What have you been doing?
This volatility, actually, Mike, was really around all month, starting in May. What people didn't notice is that the S&P spent basically the entire month of May sitting in a range as the VIX just crept higher and higher and higher. VIX really peaked out on last Thursday. Really interesting day today, Mike. We were down 30 at one point, and the VIX had sold off to only up 1.8%. And closed the day down 19.34 to be exact. And the VIX only closed up 1.22% to 20.11. Kind of spectacular in the way that the VIX kind of underperformed today. The bonds, the 10-year note, which has really been the dog that's wagged this market's tail, looks like it finally found a floor. And that really provided for a floor, I think, for the S&Ps and the VIX to maybe find a ceiling. I'd be shocked if we're not up, several handles in the morning. And The only real wild card is, if bonds find a floor, is that China issue, which seems to be a real problem.
Yeah, no, that's definitely a good point. The China issue. It almost seems like we rallied off of the China news last week. Alex, you got anything to add? What you're looking at? What you're seeing? Any big movements over there at Options Express? Any rattlings?
A lot of rattling and shaking going on today, but I think Mark pretty much did a pretty good overview of it. A lot of futures trading here today. Interestingly enough, it's become a big part of our product mix, and obviously we came in terrible, and everybody looked at, as Mark pointed out, the 10-year and gold, and everything has been laser focused on the 10-year lately, and started to rally back in the afternoon, and looked like we might close near the highs of the day, but still down. And then we got a little weakness in at the end of the day. And a lot of this is, as Mark pointed out, it's been internationally driven. Much of the rally was the money coming out of Asia. And we may get that again if this continues in China. But, we came in with rotten news. Interestingly enough, last night I was on the site, and there were a few Globex hiccups last night for a couple people, but there seemed to be a lot of Sunday night activity going on for obvious reasons. I think everybody has been laser focused on rates in the 10-year, and we, on a relative basis, we didn't close that bad. Not that it was a day you want to write home about, but we closed kind of towards the better part of the day, especially as awful as it looked in the morning, and we'll keep looking at the 10-year.
Yeah, Alex, it's kind of funny. I was in a couple of weeks ago. I was in the VIX pit before, just this thing was starting to heat up. Call it very end of May, right before Labor Day or Memorial Day. And I said to a guy, broker in the crowd, I said, "Well, what's going on, guys? Anything busy?" He said, "No, it's dreadfully slow." And this is right after we'd seen that big pop in futures volume in the 2, 5, 10, and 30 year. And I looked at the guy and I said, "Well, I think things are gonna pick up for you guys. I wouldn't worry too much." And lo and behold, sun shines on a dog's hindquarters.
A broken clock is right twice a day, people. No, and well, Nate, I know we're going to interview you during the interview block, but you're the futures guy. Your service and what you do is geared towards helping futures trader trade conservatively, as you had mentioned. What have you noticed? Anything you guys are looking at? And when the markets pick up like this, everybody seems to gain a bigger interest. Anything you guys are keen to right now?
Like I said, we focus on the S&P. It's only because they don't like to hop around. Maybe we hop around between different products, and it doesn't mean that we don't look at gold and things here and there. But we like to focus on it, especially with this volatility. It's with as fast as it is, it's just great to be able to focus on one thing. And obviously, you guys know that the S&P has been very volatile, so it's been very good to us. It's been pretty fantastic. So we had some big targets here that we hit this morning that we were looking at, and the volatility is just great because we just get to those targets faster, which is great.
That's interesting. And are you like signal based? I guess we could save this for the interview block, because I'm just curious as to, when the market's teetering around like this, like Alex mentioned on a Sunday night, and just for the benefit of our listeners, are there things that you're looking at without getting proprietary, or the things you're looking at on a Sunday night that might tip you off to how you're going to approach the market on Monday?
Well, not necessarily. The way we go about trading, we know our buy and sell numbers and our targets before the day ever begins. Now, again, that being said, Sunday night when I wake up in the morning on Monday, if I'm closer to one of my short numbers, of course, I'm looking to short before I'm going long. So that's really all I'm looking for, to see what's going to happen as we open on Sunday. And of course, with this volatility that we've been having, it's just been really cool to wake up and see what's happened overnight and what's going to be happening during the day.
Great. Well, if we don't have anything to add, I think that's a pretty good parlay into the interview block.
The interview block.
And now it's time for the interview block. We've got Nate Bluestein from Pivotal Trading Concepts on the line. Nate, how are you doing today?
Fantastic.
Great.
Thank you for having me.
Absolutely. I'm just going to let you why don't you tell our listeners a little bit about Pivotal Trading Concepts and, how you guys have come to be and what, where you're located and, what kind of service you provide.
Absolutely. Well, Pivotal Trading Concepts was created to really help other people to understand futures trading. I obviously was trading long before I started educating, so that was kind of a roll into it. But I was trading on my own, of course, trading from home, which is always fantastic. And I'm in Michigan, so back in 2008, if you guys remember, I'm sure you do, the economy took a nosedive. And here in Michigan, probably we felt it the worst. And I had a lot of friends that had lost jobs and family members. And so that actually happened to be a very, very good trading year for me as well. So a lot of people were asking me to trade their money. And of course, not very keen on doing something like that. So of course, they asked the second question is, can you teach me? And it was something I never had thought about before. And so it started really as, I had a friend over the house teaching him to trade. And of course, he tells another friend he's learning how to trade. And before you know it, I have a couple people behind me every day when I wake up at my house trading. So I was like, all right, there's got to be a better way to do this. And of course, that's how Pivotal Trading Concepts got started. And we do most of our educating now via online on webinars and chat rooms. So that's we created to make trading easy and to get people to really understand how the market moves and how the market works. We don't use any indicators. We're based off of price, pattern, and time. We understand how markets move. We don't look at any charts really, but one chart. We look at a 5-minute chart of the S&P. I can tell you that, guys. And we know just that the institutions drive the market. And of course, everybody knows that. I mean, everybody's sitting here listening, and you guys, of course, all know the institutions drive the market. But we understand how to spot where they're trading, knowing where they're taking the market. So understanding where we're buying, where we're selling, and where our targets are. Especially in the futures markets. I know a lot of people out there, will talk about how they scalped a point here, scalped 2 points here, whatnot. But what we look for is those big movements that the institutions take us. Those 10, 20, over the last couple of days, it's been a 40-point move that we've been looking for. So being able to look for those positions, and that's what we teach, is how to identify before it ever happens. So our people know, our members know where they're going long, where their targets are, how to trail the market, and then what we're looking for going into the next day.
Gotcha. So you're kind of, what it sounds like, and you're talking to a former market maker on the floor at the Chicago Board of Trade, and I know Mark and Alex both did their time at the CBOE, and Alex also did some time in New York at the ICE. So you're
Fantastic.
talking to some trading floor guys, but now you look at the trading floor and it's not what it used to be. So it almost sounds like you've created an environment that's a virtual trading floor for your members. Is that accurate?
Exactly. Obviously you guys on the trading floor, you guys all got to see the action that was around you. And so, most of our members are at their own home. What kind of action can they see except for what's on their chart? So it enables us to be able to say, hey, this is what's happening right now. This is where all the action is in the market right now. We have obviously big institutional buying here. This is where our target is, or vice versa.
Nate,
Yeah.
What would you say are some of the biggest pitfalls that people trying to learn how to trade make? What differentiates a smart guy that isn't good at trading futures from a smart guy that is good at trading futures?
Well, the biggest problem that I've had with some of my members is getting them to unlearn the stuff that doesn't work. Okay, that seems to be the biggest problem, probably in anybody's trading. And a lot of people have whatever, either they've read books or they've gotten some kind of education somewhere else that's not accurate, not correct. And so teaching them to really simplify their trading, get rid of, one of my favorite ones was one of my members, when I met with him, after his first month, he came and he said, this is my trading chart when I trade. And it's got a gazillion lines all over his chart, some that he drew, some were, whatever, Bollinger Bands or this or that. Mm-hmm. And I'm just like, how can you ever take anything away from this chart? And so it's really, like I said, simplifying trading. We can get rid of our indicators on our chart. Just understand really what the market's going to do based off of volume and price. Mm-hmm. And so that's the biggest problem, and it probably always will be, is getting people to get out of their stubborn, prideful ways that aren't working, by the way. So, but that's human psychology, and that's obviously the biggest obstacle in trading, no question.
So what do you do about, you're in a business where there's a lot of good people and a lot of bad people. What do you do to differentiate yourself from, and really help educate the public on some of these firms that maybe aren't as, shall we say, scrupulous as your firm?
Well, of course, I don't ever call out another business, by name. I would never do that.
Feel free. If you want to call out some of these firms, you have an open forum here. I really appreciate it. And there's a lot of them, but I'm not going to do that. I'm not that kind of guy. But there's a lot of them out there. I mean, you guys know. I mean, you've all seen the emails. Hey, this is the new indicator to use in this market. And it's just like, what does that mean? So the old indicator wasn't working, so you had to create a new one. And then what happens when the market changes again? That indicator is not going to work. So you guys have all seen it. I'm sure the listeners have all seen these emails, the new indicators and all that kind of stuff. No, but what differentiates us, and like I said, there are a couple other good ones that I know of. Like I said, there's not many. But what differentiates is that we really care about our performance of our members. So we do whatever it takes, really, to make sure that people understand what's going on. We hold classes every month. And by the way, our membership that we do, it's just it's one membership. You're going to learn everything in one time. It's not like, you have to learn this, and then you have to pay for the next thing. And then, then you can get to the platinum level and you'll know everything. It's like, no, once you sign up with us, you're going to know everything. And you're going to learn it all. And again, we usually teach over a week period of time. Now, of course, you're not going to be an expert in a week, but you're going to have all the information. You're going to get to go over those videos over and over again. And then on top of that, I have a daily chat room where I'm trading live with our members every day. So they get that hand holding. Okay, you guys learned this in the class. So according to what you learned, we should be going long here. And here's our targets. Remember how we get our targets. So they get a lot of hand holding, and we're doing, webinars often for our members where it's members only. We don't invite the outside public in. Only the members can come in. So, we go over everything and say, this is what we're going to be looking for tomorrow. This is what we're looking for next week. We have this target in play. Everybody remember we have this target in play. And so just a lot of stuff being reiterated, and it's pretty fantastic. We have a lot of great members, some that have been with us for a couple years and some are new. And it's just great when, they'll come in and really know what I'm going to say before I say it. They'll post the target in the room before I even am able to say it in words. I was like, guys, remember our target. And they'll put it in there. And I'm like, that's exactly right. So.
Gotcha. So I was going to ask that question of how interactive the chat room does become. It sounds like you allow some interactivity between the other members.
Again, I'm the only one on voice, so they're allowed to type. I try to keep anything that's not market related out of the room, so I usually will cut that chatter. But anything market related, if especially if it's members or members only are in our chat room, so I want to make sure that they understand everything. So a lot of times I'll even ask a question. Hey guys, everybody know where our target is, and so they'll all write where they think it is according to what they've learned. And, again, the ones that are newer, maybe a week or two, they don't quite get it yet. And that's fine. Usually it takes a month to really get into it. And so, I do allow that because I want them, again, it's easy to sit back and say, I know the answer, but I don't actually have to put it out there. So, I want to make sure that we test our members too. And then, of course, like I said, I'm always there as that support, even if they're wrong.
Gotcha. It sounds like you guys kind of subscribe to the KISS method, the keep it simple, sir.
Well, to put
I
it
always say
nicely.
keep it simple, Sebastian.
There you go.
Yeah, we absolutely do. I mean, I don't consider myself the smartest guy in the world. I know how I like to learn, and that's probably how I set up Pivotal Trading. Pivotal Trading is it just I try to make it really simple. Like, hey, how would I understand this? So I really teach it in a way that's really acceptable and everybody can understand it.
Gotcha. And to our listeners, how would they be able to find you?
Oh, they can go to pivotaltradingconcepts.com. We actually have we redesigned, have a new website up there. A little bit of a work in progress, but it's up there, and you can see a little bit about what we do and the products that we offer. Because not everybody, what's great with us in the trading room is, everybody in our room, are professional traders, but some people have 9-to-5 jobs. So there's always something for everybody.
Gotcha. And is there anything, any words of wisdom or sage advice you want to leave our listeners with?
Well, this is what I always like to tell people, that don't get your information from CNBC and Bloomberg.
What about me? I'm on Bloomberg all the time.
Well, it's not for you, Mark. But no, because here again, you have to remember ultimately what those channels, those stations do is it's a marketing tool. They're trying to get people to watch them. So it's funny,
it sounds like you're a firm believer in Fox Business News.
No, not necessarily that either. I'm just saying that, and this is a thing that when I was younger, I fell into this too. I'd be watching CNBC, and of course everybody's on. They have all the bears on, the market's tanking, so they have every bear on in the world saying, "Oh, the market's going much lower, sell, sell, sell." All this stuff happening. And then by the time you're like, okay, you buy into it because they're pushing it in your face, so you sell. And of course, what happens right when you do that? Market bounces.
Yay!
So not 100% of the time, but I've seen a lot of that. So again, we strictly go with what the market's telling us. I mean, last week we had some good news events that came out, and again, the reaction to it, of course, was what? Negative. We came down. Really no reason for it to be that negative. It's only because the institutions had our targets down here a little bit lower. Well, I should say a lot a bit lower, but it only took 2 days to get there, which was fantastic. But that's my only piece of advice. Don't buy solely into, I'm not going to say names like I said, but what these people you're saying online, because I know a lot of people, like I said, I used to be that way too, long time ago.
Gotcha. Well, I can't thank you enough for your time today. And once again, that's pivotaltradingconcepts.com if you're interested in learning more about what they got going on. We appreciate your time today, Nate, and thank you very much.
You got it. Thank you, guys.
Thanks, Nate.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that leads us to our next segment of the show, the unusual activity, or as we like to pin it, the odd block. So
The odd block.
We've had some interesting days the last couple weeks. Mark, what was unusual today?
Well, here's one that trades by appointment, meaning rarely trades. WebMD, WBMD, trader bought about 3,000 of the September 30 calls, paid up to $1.05. Points toward a little bit of bullish activity. WebMD is trading 25.18. Again, we don't know 100% whether it was whether the customer was, setting up a short hedge. But the way this traded, it looks like the guy was trying to buy it because he basically ran those calls up from about 90 cents all the way up to $1.05. So certainly an aggressive buyer. What I like most about WebMD is it allows me to tell my doctor exactly what's wrong with me, and him go, "Oh, you must be on WebMD, and you're wrong." Next, sorry. You big into WebMD at all there, Mike?
I am not. I should probably have a regular MD before I start subscribing to a WebMD. No, but so you were looking at which ones were they?
The September 30 calls.
Sure, there they are. Looks like they went through it about $1, 3,000 times.
Ran them up.
Which this strike coming in had a larger open interest by about, 2 times the regular strike at that place. So you think it might be somebody adding on to an already bullish position?
Maybe. Looks like a good day to build with the market off so low.
Yeah.
So now here's a fun one. Gerdau S.A. GGB.
GGB.
Yep. Customer putting on a put 1x2, buying the December 6s, sold the December 5s, and he also bought some of the September 6s.
Yeah, I see that.
So kind of an interesting trade. There's decent open interest on the D's and the SEP, not so much on the December 5s. Looks like a fun little way to play bearish the name and try to get long at a little bit above 4 based on what I'm looking at. Potentially maybe a little bit of an off strike put spread if you're thinking the SEP and the D's were the same trade, but I don't think they were.
Yeah, that's just a weird one to me. If the SEPs aren't involved, I mean, the stock's trading at $5.38. If you're buying the 6 put and you're selling the 5 put to finance it, I don't know. I don't see the benefit. It looks like you could do it cheaper unless is this a hard to locate stock? I mean, why wouldn't you short the stock and buy the 6 call?
Yeah, I don't know. So, kind of a weird one. Here's an interesting one. This is just kind of what I think is unusual is, VIX and VXX. Average volume on VXX, calls and puts, on a daily basis, about 381,000 contracts. Traded 496,000 today. But then you look at VIX itself, average volume 560,000, only traded 330,000 contracts today. Really odd. One, why would it give me a good reason why VXX should ever have more volume than VIX? And then two, just super odd that VIX on a day like this would have such low volume, especially with option volatility up 10% today.
Yeah, that is that's one to keep your eye on to see if there's a pattern or a trend that develops with that. I think by definition, doesn't the VXX? I mean, they have to trade a certain number of VIX contracts every day in order to keep
VIX futures. Yeah,
VIX futures.
They trade what's called a TAS, or a trade at settlement, typically for that product. Yeah. And the one thing that's interesting about the VXX is with the VIX term structure. Now that July's 2010. July closed $20.10. August closed $20.30. SEP 2080, OCC 21. We've got an incredibly flat futures curve that is dead in line with the cash VIX closing 2011. Maybe the one thing is without that big huge contango issue, what I like to call the Sisyphus effect in VXX. Maybe you've got some players looking and saying, I'd rather try and play for maybe a little bit of positive contango roll if that develops in the next day or two. Although personally, I doubt that might happen.
Yeah, how often do you see it that flat? I mean, there's no contango or backwardation in the.
Yeah,
I can't remember the last time it was that flat.
It was probably 2011 that we had that type of event, or maybe into the fiscal cliff we got close. But or the Greek crisis last year, I think things flattened up. But it's really indicative of a higher VIX. And I keep saying this, when the VIX goes from 13, 14 up to 20, and then kind of hovers around there, it's probably going to see somewhere closer to 30 before it sees somewhere closer to 11 again.
Yeah, that makes sense. Any sage advice for the so-called volatility sellers at these points?
If you're looking to get short vol, I certainly would not be doing it via the normal VIX trade. I think the way the VIX has moved relative to the way the SPX has moved, the strangle seller is crushing the VIX call seller, or even the VIX futures player.
Gotcha. Alex, you notice anything unusual in today's activity?
The only thing I would add is to the premium sellers in VIX, the retail firms that had it at a 25 or 30 margin are almost all going to the 50 and 60 margin. I mean, you're seeing the same thing in VIX. You saw in gold and silver last week where the requirements are changing. So the only wisdom I have is if you are going to trade it in a fashion where you've got a requirement, not just be an outright buyer, if you're going to be selling it, just have a lot of powder dry, because you don't want to find yourself in a situation where you're kind of right short term, but you get taken out of your trade because you've got a margin or a haircut issue.
Yep. To Alex's point, the two most feared words in the option traders world are forced liquidation. So it's something you definitely want to keep your eye on if you're using margin in any capacity to implement the trades that you have on. You have to be aware of those forced liquidation situations. You don't want to be in them. Keep your powder dry, as Alex said.
Yeah, I agree.
Yeah, and the last couple of days have been the compliance/risk department's busy season for this year. So you want to really have a clear picture on requirements and how rapidly they can change. Thursday show last week, we talked a little bit about gold and silver, and about 10 minutes after we taped the show, the CME bumped margins on them. But that was not hard to forecast. I mean, you got VIX. VIX moved 6% today. That means the vol of VIX, just as a nice round number, is 100. You can't margin that at 25%, and you're going to need to margin it more in the 60, 70, 80% area, if not more. And again, the reminder, we did this on Thursday's show, margin is not intended to protect you, the customer. Margin is intended to protect the brokerage house from you, the customer, walking away with a large unsecured. And when you've got things moving 6% a day, and you've got possibly the rest of your portfolio that's generating the SMA, if you're holding stocks or bonds, you're getting beat up on two sides. So just be cautious about it. To your point, Mike, when people get forced liquidation, they of course always blame it on somebody else. They blame it on brokerage policy, or they blame it on a broker doing a bad job, and that's an easy scapegoat. But the reality is, in environments like this, keep a lot of powder dry, because unusual things are going to happen.
Absolutely, and truer words cannot be spoken. I mean, if there was a there's no perfect way to address it. As the brokerage firm, I've worked in both capacities, as the customer and as the broker. As the customer, you're always trying to engage in what I call the ultimate brutal honesty with yourself. Is what you're doing, putting yourself in a position to get forced liquidation? And if the answer is yes, then you have to be uber careful. And you hit the nail on the head that the brokerage firm, yes, they want to facilitate and give their clients and customers access to the vehicles that they trade. But at the end of the day, if they're giving them access and they're using those as weapons against the firm, the firm has to protect itself. So be careful out there.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, rolling into Xpress Block. Alex, what do you got for Xpress Block on this beautiful June Monday?
On this beautiful June Monday. I'm sitting here in my Blackhawks shirt sweating. Rough day today, obviously. Not a lot of green lights. The only green lights in my watch list that were up today were pretty much VIX and CBOE, and anything living off the 10-year. I think one question that a lot of people scratch their head about is why do the brokers go up on days like today? And much of the brokerage community is levered to the 10-year rate. Plus, volume was good Thursday and Friday, but it wasn't that kind of good volume you get all warm and fuzzy about. You're watching your clients kind of lose money, but came in ugly today and stayed ugly for most of the morning. We've had this litany now of, I think we're going on 18 or 20 days of 200-point range or more. And I think that's one of the contributing reasons to why we're seeing VIX sit around 20. VIX at 20 implies 20 over 16 daily range, and that's about 200 points in the Dow. But we'll be keeping an eye on the 10-year. We'll be keeping an eye on Asia. I'm a real firm believer that if China and Japan get a lot worse, and those two aren't always lockstep, although they've been lockstep lately, that some of that money is going to start coming over here. That's what was fueling much of the rally the beginning of the year. But tough trading day today. I mean, we came in red. You kind of get up in the morning, you're brushing your teeth, shaving, you got CNBC or Bloomberg on, or Mike, as you pointed out, Fox News for a few people. And it was a rotten start to the day, and it was actually kind of a decent close, but still down for the day.
Yeah, it was one of those days that, it looked like it tried to pop up higher around the noon balloon and then got sold off into the afternoon again.
Yeah. But, Alex, the one thing I'd say is, with the way the S&P moved, you would have thought that the VIX would have topped out at least at a higher level than it ended up on Thursday, and it did not.
Yeah, but going into Thursday, you had, I think it was going into Tuesday, you had 10 consecutive days. In fact, I was brushing my teeth and listening to Bloomberg when they talked about 10 consecutive days of a 200-point range. And people kind of scratching their head and saying, well, we had up days and the VIX didn't go down. Yeah, but we had a big range. And I may be the only advocate of this, but I don't view implied volatility so much as range as I view it the cost of hedging. And when you've got 200-point days, it's tough to hedge. I hate to be overly dorky, and I know I do that. But if you dig down into, the writings of Fisher Black and Myron Scholes, they did not talk about implied volatility as being dispersion as much as they talked about it, the cost of reaching out and getting the delta. And people have forgotten about that. And the advent of vol products have given people, great opportunity to trade vol. And the other day I heard a rumor of a new vol product. So CBOE will get some competition. So maybe that'll be a catalyst to bring some of the single stock stuff, which we've talked about in the show a lot, and which I would love to see. But, vol's a tough animal to trade. It's tough to understand. And, a lot of people prognosticate on what a low VIX means and what a high VIX means. And as we learned, a low VIX doesn't mean low risk. That's not what it means at all, and that's what we're going through now. But interesting markets.
They are, and you make a very good point about the cost of the hedge. I've always heard the old adage about, the cost of the insurance is, would you buy fire insurance when your house is already on fire?
Right.
And when the market's down 20 and the VIX is up 6% in one day, your house is on fire. You're not going to buy the insurance today. It's having that insurance proactively before the fire happens.
Yeah. And Alex, might I add, that was an impressive walk across the Grand Canyon yesterday. It was I'm just overly impressed at your balance and strength and calm demeanor under pressure.
Thank you. I teach a class outside of here. It's not an options class, and I'm not going to expand on it, but a little bit about what Nate talked about. The first class you teach, you have to undo people's bad habits, and that's always step one in education. And back to what Nate said about unlearning bad habits. Obviously, Mark, you're kidding, because as most of you know, I weigh 300 pounds, and me doing the Grand Canyon on a wire.
Did you watch that last night on the Discovery Channel?
Yeah, and he was amazing.
That was incredible.
Yeah, that was unbelievable. But I don't even go to the rim of the Grand Canyon. I'm so heavy. I'm worried about impacting the architecture. So it wasn't me.
Very good. Well,
Wow.
Why don't we wrap it up with what's going on around the block?
Around the block.
Mark Sebastian, what's new at the option pit? What's coming up?
Well, I think going forward, it's going to be a slow economic week. That 10-year is going to keep determining what's happening for the market, at least for a little bit. If the 10-year spends a couple of days in an actual range and calms down, then the question is does China play out the way Alex was laying out, which would be great for the markets, or does China have some sort of economic spillover effect on the markets and kind of take the place of a U.S. debt downgrade? My guess is probably leaning toward Alex, but who knows? And in terms of what's happening at Option Pit, I got a webinar with me and Stephanie Link tomorrow at that's Tuesday, so today actually, if you're listening, at 3:30 Central Time on trading volatility and direction.
Very good. Always informative. The Option Pit webinars are always a good resource for all of our listeners and anyone else. So thank you for that, Mark. Alex, what's new in the world of Options Express and Charles Schwab?
Very briefly, I'll showcase one webinar. That's Wednesday. Russell Rhodes from the Options Institute at the CBOE, my old shop, is doing a 1 p.m. on VIX, on trading volatility. And I'll throw in one arcane piece of trivia. As of today, Expiration Friday is now Expiration Friday. OCC will now process regular options on Friday after the close.
Yay!
The back office doesn't have to work on Saturday anymore. So Expiration Friday is now Friday, and the confusion, the misunderstanding, the myth about who trades, after the close, they're all gone.
Very good. All right, so a lot going on in the options world. Listeners, have a great day. And Nate, once again, thank you very much. Mark and Alex, thank you. And we will see you on the next episode of the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.